The payments industry moves fast. The economics behind it move even faster. Welcome to On the Wire, a show about the economics of payments, the institutions moving money, and the infrastructure underneath it all. This episode is produced by Payware using AI voice synthesis, built from primary research, technical documentation, and real market data. No studio, no hosts, just the content, clearly presented. Let's get into it.
Picture this. You are walking out of a live concert, your ears are still ringing, and you want to buy a t-shirt.
Oh yeah, the massive merch lines.
Right. But instead of standing in that huge line and pulling out your credit card, your phone just hears a specific soundbite playing at the 10, and, well, it just pays for it. Automatically.
That sounds like science fiction, honestly.
It really does. But today we are taking a deep dive into a technical brief from Payware to explore the hidden plumbing that actually makes wild scenarios like that possible. We are unpacking a massive industry misconception.
Yeah, the whole battle between open banking APIs and direct integration standards.
Exactly. I mean, people hear open banking and assume it is the absolute pinnacle of modern fintech. But what if it is actually just the regulatory bare minimum?
Right. To see why it is just the bare minimum, you have to look at how open banking actually started. In Europe, it was driven by PSD2.
Which is that regulation designed to break up bank monopolies on user data, right?
Exactly. It legally forces banks to build standardized APIs so third parties can access your account. And look, the undeniable strength here is coverage.
Because it is mandatory.
Right. A merchant immediately gets 100% bank coverage for basic transactions. Like those pay with bank buttons you see online.
Yeah, but those buttons often lead to incredibly clunky experiences. You click to pay, get kicked out of the merchant app, bumped to a mobile browser, and then forced to log into your bank separately.
It is awful. And that friction exists because of how regulations mandate security. Under open banking, you usually have to use a payment initiation service provider or a PISP.
A PISP. God.
Yeah, the intermediary acts as a middleman. Because the bank does not inherently trust the merchant app, the PISP actually have to physically route you through the bank's own secure web portal.
Just to authenticate the payment. So, it is functional, but definitely not magical. It is kind of like a city's building code.
Oh, I like that. How so?
Well, the code guarantees every house has functional plumbing so the water turns on, but a building code is definitely not designed to give you a luxury smart shower.
That is a perfect way to put it, and that is exactly why the industry needed to build a separate system for those luxury experiences. Enter direct integration.
Okay, so how is that different?
Well, instead of a government mandate, this is an opt-in, standardized infrastructure that banks actively choose to adopt. The brief actually compares it to SMTP.
The protocol that makes email work.
Exactly. Just like Gmail and Outlook agree on a shared technical language to send messages seamlessly, banks and fintechs agree on a shared framework.
And because they are choosing to speak the exact same language natively, they do not need that PISP middleman forcing a browser redirect.
Right. The apps can just do a secure native token handoff right in the background. By removing that clunky web flow, you unlock seamless app-to-app payments.
Wow.
Yeah, and you can utilize all 7 payment initiation methods. These are different technical triggers like scanning a QR code, tapping an NFC tag, or using a deep link.
Which actually initiate the money transfer natively on the device. So this is what makes those wild examples from the text possible.
Exactly, like Bluetooth low-energy proximity payments.
Right.
You pull into a drive-thru, a beacon detects your phone, and the payment triggers automatically.
Or that soundbite example at the concert we mentioned. Because the bank integrated directly, their app is securely authorized to listen for that specific audio trigger.
Right.
Wait, hold on. If buying a t-shirt with the sound wave is possible right now, why are banks wasting time with basic open banking APIs? Like, why would not every single bank just use direct integration?
Well, it comes down to economics. Implementing direct integration requires a bank-by-bank investment.
So it is expensive.
Very. It costs tens of thousands of euros and takes months of development per bank to set up those secure native connections.
Oh, wow. So a merchant simply cannot achieve 100% market coverage instantly if they rely solely on banks opting in.
Exactly. You have this incredible technology, but maybe only half of your customers' banks actually support it. And that gap is why Payware utilizes a hybrid architecture.
A hybrid approach. Makes sense. How does the math on that work?
You use direct integration with maybe 10 to 15 strategic major banks. That captures about 60 to 75% of the total payment volume.
Giving the vast majority of users those frictionless premium features.
Right. And for the remaining 25 to 40%, like smaller regional banks or credit unions, the system seamlessly falls back on open banking.
So the merchant still gets guaranteed 100% coverage, but the user with the smaller bank just gets the slightly clunkier browser redirect.
Exactly.
It is exactly like the airline industry. Major airlines establish direct, expensive partnerships with specific carriers to give you premium perks.
Like sharing lounges or seamless baggage transfers.
Right. But they still rely on basic code-sharing agreements with everyone else just to guarantee you can actually fly anywhere on the map.
That is a great analogy. Open banking is the compliance floor that makes sure you can fly. Direct integration is the innovation ceiling that dictates how comfortable the flight is.
The compliance floor versus the innovation ceiling. I love that. Well, as we wrap up this deep dive into Payware's architecture, here is a final thought to mull over.
Go for it.
If these direct integration protocols continue to outpace slow-moving regulations and eliminate the friction of paying, well, how soon will ambient payments become your daily reality?
That is a fascinating question.
Right. How long until you are paying for your morning coffee, your fast food, or your concert tickets without ever actually reaching for your wallet or your phone?
That's On the Wire, produced by Payware, the transaction resolution network for instant A2A payments. This episode was AI generated from Payware's published research and documentation. If something sparked a question, the full source material is available at payware.eu. If you work in payments at a bank, an ISV, or a merchant organization, and what you heard is relevant to what you're building, reach out. The conversation doesn't have to stop here. Subscribe to On the Wire wherever you listen to podcasts. The next episode is already waiting.